Hey everybody, welcome back to the Thursday evening financial thing live stream. After a week off, unfortunately last week not able to make it due to some personal circumstances, but the most important thing is you are here right now. I am here right now, and that's all that really matters. Hope you're having a great week. Thank you for joining me. I have a lot to get to today. We're going to be taking a look at the peer-to-peer lending events and news that are kind of surfaced this week. And also we're going to talk about Property Partner. They have been acquired. And we're going to look at Unbolted. Amazing statistics on their recovery rates. We've been talking about Unbolted for a little while on the stream. And it is a company that I've been investing through for a while. Super happy with them. We're going to look at Wealthsimple's results. We're coming up to 4 years ago when I started the Wealthsimple Robo investing account, and I just wanted to show you what the results have been after 4 years and compare it to our trusty index tracker, compare it to the FTSE 100, and just see if this Robo investing tool has really been worth it over the 4 years. We're going to take a look at the Trading 212 portfolio, show you a couple of things on there that we've changed in the portfolio and some of the emotional struggles that I'm having with this account right now. And we're going to do a quick cryptocurrency wrap up at the end, talk a little bit about what's going on with Bitcoin, the El Salvador release on September 7th, where El Salvador made Bitcoin officially legal tender, also what's going on with that. Another country introducing a bill to make Bitcoin legal tender. My thoughts on that, and we'll say a quick hi to everybody, and then we'll jump right into it. And also, before I do that, don't forget sponsorship by Kuflink. Thank you to Narendra at Kuflink. Sign up today and receive up to £4,000 cash back on your first investments if you are a new customer. Terms and conditions apply, and capital is at risk. join.kuflink.com/financial-thing. You can go to the Financial Thing website under the cashback link page there and get yourself some free cashback if you are not a Kuflink investor. Let's go ahead and say hi to everybody in the stream. Steve Manton is here. Good to have you back. Thank you, Steve. I'm glad to be back. I definitely missed it last week. Sue London, Newcastle upon Lyme in Staffordshire with the rain. Colin Perry in the Peak District. Paul in Kenilworth. Stephen Hale in No Rain, Nottingham. Peter Vince from Leatherhead. Alan Lomas in Chesterfield. Aki Chap is here in Accrington. Recently flooded. Mark B is here. Nice to see you. Thanks for joining us, Mark. Steve Thomas from Macclesfield. Debbie in the sweaty, hot Cayman Islands, hopefully avoiding those hurricanes. And Annabelle Nyron from Sherborne in Dorset. You're back in the UK. Usually you're joining from Spain. Mark Mason is here, of course. Good evening to you. David Halls from Stowmarket, where I have no idea where Stowmarket is. That's a new one for me. So let me know. Please hit that thumbs up if you can. If you enjoy this content, subscribe to the channel. That's my beg for that. I might ask you to do that later. So let's hop right into the news. Peer-to-peer lending right now. We're going to look at Property Partner. Now, Property Partner has been very, very quiet ever since COVID first began to surface. We really haven't seen any new investments, and it's quite a concern when you see a company not offering new investments, because in order to do that, in order to make money and revenue, they're going to have to offer new investments, and they haven't been doing so. As I've been saying for a while that I've been a little bit concerned about Property Partner, and now we see a company, actually an American company called Better, that has acquired Property Partner. And this was really out of the blue. There wasn't any inkling that Property Partner was going to be acquired, although it would make sense if the company is going through some struggles on the back end that they would try to find a partner. So this company in the US, they say, is one of the fastest growing digital first home ownership companies in the US, on a mission to make home ownership more accessible and convenient and less expensive for all consumers. Since 2016, Better has funded over $30 billion in home loans and over $7 billion in cumulative insurance coverage. Better expects to become a publicly listed company later in Q4 of 2020 via SPAC merger, which, by the way, SPAC mergers are quite risky, but we'll see what happens with that. Property Partner will leverage better scale and global capability. Better is committed to investing in, growing, and enhancing the Property Partner platform for the long term. So what's going to happen? One of the things that most people are going to be happy to see is that Property Partner will be completely getting rid of their account fee, which isn't a lot. It's only £1 a month. And they will also be getting rid of they'll be reducing the annual management fee from 1.2% a year to 1% a year. Anything we can do to get the cost down is a good thing. What do I think about it? I think the verdict for me is going to be in the future. I don't know. The jury's still out on this situation. Property Partner, again, has not really been doing much. And I do have some money tied up in investments on the platform that have been very stagnant and not been doing particularly well. So we'll see if this acquisition works out well for the investors, because that's what we really care about, is how investors are treated, and whether or not we have liquidity in the platform is very important. But they have been acquired, and they paused trading on the retail market until the 8th of September to give things a little bit of time to settle. Let's look at the unbolted performance summary here. Now they claim a record to be proud of: 100% recovery on all defaulted loans. And if you're an unbolted investor, you're going to get these emails through probably every couple of days saying, we have recovered a defaulted loan, this money has been credited to your account. And it's quite unusual, because within peer-to-peer you just don't see a lot of those fast recoveries. But since we're dealing with things like jewelry and gold, those things are very easy to sell on open markets for whatever the spot gold prices are, and to recover those funds on those defaulted loans. So this is the performance summary. If you ever thought about investing in Unbolted, it is very niche. It's not a big company, but they have 4,754 loans with a cumulative loan amount of £33 million that have been repaid or renewed. That's, again, quite impressive for a smaller company. Another 437 loans with a cumulative loan amount of 1.5 million have defaulted. That equates to a default rate of 7.7% by number and 3.8% by value. This is the most important thing about Unbolted. Of these defaulted loans, recovery has been completed on 394 loans with a recovery rate of approximately 124% of the net amount due to lenders. So that means for every £1 of loans that has been invested in, they've managed to recover £1.24, which is, again, a really good result, because it means that investors who are putting their money into these loans are getting paid back when they default. Many more loans, although not defaulted, have been repaid through the sale of assets under the instruction of the borrower. For example, loans made as pre-auction advance have been repaid from auction proceeds, and some high-value loans have been repaid through organized sales to dealers. So again, really good results on the defaults, and we can see the total default rate down here at 7.7%. And again, I expect that Unbolted is going to continue to make smart decisions when it comes to loaning investors money on particularly things like gold, jewelry. You've got these high net worth and business loans here, which have a default rate of 0.8%. Active and performing 34 loans renewed or repaid. I'm not a huge fan of investing usually in business loans, but Unbolted have been doing pretty good with that. And then watch dealer loans, you can see repaid or renewed 111 loans. But these are the really meat and potato of their loans, are these consumer loans on gold and consumer loans against non-gold, which make up a good portion of their lending, is what we really want to look out for. So well done, Unbolted, good performance. Funding Circle will not reconsider retail lending until state-backed schemes close. Of course, No surprise here that Funding Circle probably just doesn't want to deal with retail investors anymore. They're, quite frankly, we're a pain in the rump. And through this government-backed lending schemes, they don't have to deal with that. So they closed their doors to retail money April of 2020. And I don't foresee them opening back, if at all. Maybe that they just don't reopen peer-to-peer lending at all to retail customers at all. I wouldn't be surprised if they announced they're just strictly going institutional and strictly government lending. We've also had Samir Desai, who was at the helm for 12 years, who has stepped down. So interesting things happening over at Funding Circle. Again, not something I really invested heavily in. I was never really happy with Funding Circle. So they will not consider opening back in their retail peer-to-peer lending for now. Lending administrators to produce fee proposal following the court loss. So RSM, which is the administrator, is going to set forth to the courts and to also the Lending Action Group a free proposal. We just don't know, what these fees totals are going to be. And I think one of the main things that the Action Group has tried to put forward is we want to have some kind of an idea about how much these administration amounts are going to be, especially on these loans now that are still trying to be recovered. As you know, the court case ruled for Model 2 investors, which are peer-to-peer lending investors, to be given priority in distribution payments over Model 1 investors who would be considered creditors. That was a big victory for the Lending Action Group and for lending investors. So they are going to put forward a proposal and see how much they want to attract in fees for themselves, which I imagine will be a tasty amount of money, but we'll see what happens with that. Then we've got another update on collateral that was supposed to be received from the FCA actually this month, and now they're saying that will be delayed until the end of 2021 while they get all of the information together. A lot of investors, including myself in collateral, completely in the dark. I mean, but at this point, I just don't expect to get much money back from that administration. But it would be nice to get an update and find out what the hell is going on. But apparently, we're not going to get that until the end of 2021 instead of this month. And another administration, look at these fees. London Capital Financial, that bond collapse. Administration fees have hit £6.2 million and are expected to reach £7.7 million by the end of January. I mean, this is just insane, right? The amount of money that these administrators are able to make from these bankrupt companies, it's just incredible. And also, 4 professional advisory firms have charged total costs of £4.2 million. So we got $7.7 million, the administrators, and then we've got the advisory firms, 4 of them. I don't know why you need 4. So we're talking about almost £12 million in just fees from the administrators. And thankfully, London Capital Financial bondholders are going to be somewhat recompensated by the FCA and the FSCS, which is very unusual in an investment that they've been misled. This is what was decided. So the administration fees continue to rack up. Blend Network has launched a development finance product with a sales guarantee. They have partnered with a company called LDS Sales Guarantees, which allow developers to finance more schemes by increasing their loan to gross development value by over 75% and cutting their cash contributions. Now, I always, this word guarantee, I think, is a very, very dangerous word to use when it comes to investing, because really this guarantee is only as good as the company is putting up the guarantee. And again, this is not Blend Network that's putting up the guarantee. It is a company that they are partnering with. So it's actually called Development Plus Powered is the project by LDS Sales Guarantees. Now LDS, if LDS were to go out of business, those guarantees would not be good anymore. So whenever you're looking at something that has a sales guarantee or any type of guarantee on return, take that word and very lightly, because nothing is ever guaranteed when it comes to investing, and I'm not sure that's a really good word to be using for that. So just be aware if you are going to invest through Blend Network into this new product. Peer-to-peer platform closures push Octopus Choice into the red. Obviously, this is really no surprise. Octopus Choice decided to close the company down, repay everybody. Obviously, the revenues are going to drop because they're not doing any lending anymore. They posted a turnover of £328,000, down from 5.8 million. So obviously, with them closing and people are being repaid back, no surprise there. And then Rate Setter's losses deepen in the final year as a peer-to-peer lender, and this really sheds a lot of light on why Metro Bank was brought in. We obviously thought maybe there was some problems in the back end financially, but they have made a loss for 12 months to the 31st of December of 2020 of £22.3 million of loss, which was we're talking almost double from £10 million of loss in 2019. So everybody who got out of Rate Setter unscathed, very lucky there, because we weren't really sure how long Rate Setter would have been able to continue its business in its current form. So no surprise there that Metro Bank did actually come in and take over. Good news for, again, victory for the peer-to-peer lenders and Rate Setter. It's nice that we had a victory and people were able to get paid back from there. Now, next we're going to talk about Wealthsimple. Wealthsimple, for those of you who don't know, is a robo investing. And I always get emails, people ask me what I think about stock robo investing. And, I never was really a fan of it for a couple of different reasons. Number one, I don't like the way that they spread your money over just so many different buckets of funds. It's kind of the old school mentality that financial advisors used to use, where they would take your money and just spray it all over the place into different funds, maybe funds that you don't necessarily want to be invested through. But it makes robo investing makes things very easy for those who are inexperienced. But I wanted to test it out before I really said, hey, this isn't something that I think is a good idea. It's been 4 years. I started this October the 20th of 2017 in order to give it some time to see. I did not put a huge amount of money in because I didn't believe in the robo investing product. But you can see here where we are. We started with £450 and 25p of our own cash moolah inside of this product, and right now we are sitting at £593 and 15p. Time weighted 30.9%. Now, on the surface, it doesn't seem bad, right? Well, we've made 30% on our money. Great. What we have to look at when we're looking at these type of investments is, first of all, what could we have done with that money? And how would that money investment perform compared to this? And I'm going to show you that. But you can see this is the bucket that we had here. We had a UK equities. These are all funds here, US equities. We got some bonds in here. And bonds have just really been doing poorly. So it's obviously going to drag down the portfolio somewhat. We got some high yield bonds. And they do have some Vanguard funds in here, which is a good thing. But essentially we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 different bond and equity funds inside this portfolio that has returned us about £142 in returns. So let me show you here what we are looking at in returns. So we started October the 20th, 2017, and we did this dated today. I did this September 9th in 2021. Wealthsimple here, you can see 31.73% in returns. Now, if we'd have put that same amount of money in our trusted Vanguard US equity tracker, we'd have more than doubled that money over the 4-year period to 77.49%. Even the Vanguard Global Equity Tracker would have done better at 56.05%. And the poor old FTSE 100, if we'd have put that in a FTSE 100 tracker on October the 20th of 2017, we'd actually be negative 6.63% in return. So you can see, how important market timing is when you're investing. You could just get really unlucky if you'd have put your money in on that date in October 20th into the FTSE 100 today, you'd be in the negative after 4 years, almost 4 years of total time. Obviously, the real winner, the Vanguard US Equity Track, which I've said, has been a staple investment part of my portfolio for a long time, and it definitely outperformed. Again, there's no guarantee that this would do the same in the future. We could see the FTSE 100 start to take off. Personally, I don't see it at the moment. I still consider that the US market is still going to do well because we got all this Fed money being pumped in to buying treasuries, mortgage-backed securities, and Fed just keeps on putting more and more money into the economy. Every time there's a piece of bad economic news in the US, the markets, they love it. The markets love it because every time there's a bad piece of economic news, and we've seen it again and again with jobs, unemployment numbers. And again, this has a direct correlation on stock markets in the UK. If the US market is doing badly, the UK market will also do badly. That's why we pay attention to the US and the economy, what's going on. We have that domino effect. But every time there is a bad piece of economic news in the US, the markets love it because they know that the US Fed will not stop pushing money into the economy while that bad news is there. And they talk about tapering. It's not going to happen the way things are right now. Some people are saying, well, by the end of 2021, the Fed will stop putting money into the economy and stop buying treasuries and whatnot. It's not going to happen as long as the economy is as bad as it is. And it is bad, even though the media might have you come to think that it's not bad. So there you go. Wealthsimple, definitely not a place to put money because we have done about 50% as badly in that as we could have in the global tracker, and more than 50% worse off than in the Vanguard US Equity Tracker. So if you are thinking about robo-investing, I don't think it's a good idea. Personally, I think you could just take that money, put it in your own index tracker, or if you feel like you want to invest in stocks, you have the experience to do that. You probably have a much better result that way. And remember, that is in a very, very high running bull market too. If this was a bear market, these numbers are going to be a lot worse on all counts. So you can see here the US index equity tracker right now is running at £733 and 13p. And if we look at the price and performance historically, even if we just look from a year ago where this was, it has performed really, really well. So we're at £569 and 45p, 30th of August, and today again 700 and I believe 713 pounds, 733 pounds, with again incredibly low fees on this fund. So my advice again, if you just DIY invest, do your research obviously. So you understand what you're investing in. Even if you decide to go for a world tracker, you can do that with a global equity tracker here. It's not performed as well, still much better than the robo investing of Wealthsimple. But again, you're going to have slightly higher charges, and also go with the accumulation shares because accumulation shares are going to give you a better return. If we look at the accumulation price here of £733, if we do it in the income class, it's almost £120 less, and you're not getting better yield on it. You're not getting any better dividend payouts. It's 1.1% on the dividend payout right here. You can see on the income version, and on the accumulation version, you're getting 1.09%. So I would definitely recommend go with the accumulation and take advantage of that compounding interest that you're going to get during the accumulation phase. We are going to look at the portfolio. This is the Trading 212. I've not been updating those videos. I've been lazy, but I'm going to show you here on the stream where we are. Value £13,018. Again, we started about £5,500 with this portfolio. And some of the liquidations that were made in this portfolio back when things started to drop. So if you can see here, one of the big holdings of the portfolio was Laredo Petroleum, which reached 95 US dollars, and I ended up exiting right around $70. And then you can see the market just continued to tank down. It went all the way down to 37 US dollars. Now, that would have been the time emotionally and financially to get back into this share. And this is one of the things that I've really fought with on this portfolio. The portfolio has done really well, but wanting to jump back in and buy equities now when they're so high has been a real emotional fight. If I'd have had a crystal ball that worked, I would have gotten right back in, anywhere from $40 down to 37. And again, we could have made a big gain here, but I did not do that because, number one, I was afraid that this stock price was just going to keep going lower and lower, which it didn't. I thought there was a possibility it could have gone to 25, and it didn't do that. And then it rebounded. This is the problem with trying to time the markets, right? It's so difficult. Let me show you this chart. Here is where we exited, right down here about 70, and you can see that it continued to fall. And here was the $37 range, which should have been the time to get back in, and unfortunately did not do that. So right now, sort of sitting on the sidelines trying to figure out what is the best way to invest this money. And one of the things that I did recently was start looking at Facebook. I think Facebook is just ahead of its time when it comes to social media. They own Instagram. They're bringing huge revenues. So I decided to start buying a position in Facebook. Sadly, only 1.82 shares for a little less than £500 purchased today. But we're going to see what happens with that stock. I think it's going to do well for the next couple, maybe 2 or 3 months to the end of the year. And you can see here the energy stock has continued to do well, 15.22% returns in Centris. But on the back end of this, at the bottom here, our trusty little too low oil is in the negative 25%. Did sell a position of this a while ago. Thankfully got out, I think at, I want to say 57p, and then it continued to fall lower. And again, the risk taker in me would say, well, 25%, that's a big discount. Why not double down on too low oil and take that risk? But the emotional investing side of me is going, I just don't know if I can do that. It's so far in the red right now. I just don't know if I have the the courage, the investment courage, to dump more money into this already risky British oil and gas exploration company. But I'm going to do some more research this week and see if there's any potential opportunities to maybe on a pullback to put this £8,000 that's sitting in this account to work, because we are coming on almost a year. It'll be September, I think 25th when this was started. So a little bit hesitant to go back in on it at the moment. I'm just not seeing those opportunities, but still hunting around. Again, you can see a couple of these stocks here in the red, 37% down on Microvision, and too low, 25.82% down. Let's talk about cryptocurrency. If you're a crypto investor, you probably panicked a little bit this week. It was a very short-lived panic. If we look at what happened to Bitcoin over the last 7 days, we saw this big dump here. Everybody thought this was heading to 55,000 US dollars, and then we saw this big dump all the way down to 42,000 US, which, by the way, was a great time. Presented a great opportunity if you want a Bitcoin investor to hop into the market. And then we've seen kind of this red line continue even this week, very choppy. And a lot of the news stories were saying, well, it's this is all because of El Salvador, right? El Salvador, of course, introduced Bitcoin as legal tender on September the 7th this year, 2021. And there was reports of some technical problems and this and that. And the news was full of how this El Salvador situation had contributed to this Bitcoin fallout, which honestly, it was just a load of BS. I mean, El Salvador's gross domestic product is about 27 billion US dollars, which is nothing. Really has very little impact on Bitcoin. I think the country had bought maybe 500 Bitcoins. The real reason why Bitcoin, I believe it crashed this price was, a lot of people trading on margin got liquidated. You can see here on the chart, this was the price drop right here, and these were people that were leveraged traders who were betting long on Bitcoin, and there was $1.23 billion of liquidation for people who were long on Bitcoin when it dropped down to this price. So a lot of people lost money on that trade, and that's the reason I believe that the Bitcoin price had that very short-lived volatility, and not really too concerned at all. I mean, we've seen this time and time again with Bitcoin. One of the sad things that I think is really impactful about this El Salvador story too is, we've seen these stories about protests and people don't want Bitcoin to be a legal tender in El Salvador, and honestly it's because of lack of education, right? Most people don't really understand what Bitcoin is, and especially people in an impoverished country, they have more important things on their mind than learning about Bitcoin, and I think they feel like it was forced upon them, which is really sad, because in essence I think that Bitcoin is going to offer the people of El Salvador a way to generate wealth that would never be there for them. If they would buy and hold Bitcoin and store it as a store of value for the next 5 to 10 years, they're going to be very, very happy. But there's just such a lack of education and still a massive lack of understanding about what Bitcoin is, why it's there, what it does, and trying to get over the FUD and all the fake news about Bitcoin and the electricity usage and how it's not worth anything. And by the way, if you still don't understand about this very unique opportunity, you can go to financialthing.com. I put up a cryptocurrency 101 article, and it explains all about Bitcoin, altcoins, why you really want to pay attention to this, because I still honestly really believe, in my heart, I'm very convicted to know that these types of digital currencies are going to really change the way the world uses money in the future. Talk about NFTs, smart contracts, which Ethereum runs on. Smart contracts are going to be incredibly robust. They're going to be used for all kinds of different things in the future. For instance, one of the things I wrote about on my Crypto 101 article is how things like bands are going to be able to fund their own albums. They won't need to use record labels anymore, because they could let their fans crowdfund their new music albums, and then smart contracts would allow those fans to be paid a royalty on every sale forever on that album. And it would work because the smart contract in the code has that royalty payment written into it. So things like that, I mean, it's just the technology is amazing, and this is why I pay attention to these cryptocurrency movements. I think it's going to be very impactful in the future. The way that we use these things like smart contracts in the future is going to be changing everything. It's a real game changer, and we're still very, very young, extremely young. People say to me, Lawrence, it's too late, right? How am I going to buy Bitcoin at $50,000 US? And I say, no, you're so young right now. We only have about 140 million users of Bitcoin across the entire world, and it's growing about 115% a year, which incidentally is a lot quicker than the internet even grew. The internet adoption usage was about 65% a year. So if we go off of those numbers, about 114% a year increasing of users, we're going to hit 1 billion users probably by mid-2025, 2026. And the price of these digital assets, I mean, not all of them, because some of them are risky, but I think Bitcoin, in my opinion, will continue to rise up, and then eventually it's just going to become so scarce that you won't be able to buy any of it, and the price is going to just keep increasing and increasing. So that's my little synopsis on that. If you have questions or comments about everything I've rattled through about today, we're going to try to keep it under an hour. I went through the news a lot quicker than I did. Hope you got something out of that information. Next week, by the way, we're going to have scheduled. I hope this will continue to work out. Andrew Holgate, who's one of the co-founders of Assets Capital, is going to be coming here live on the stream. So bring your questions. We're going to do a general peer-to-peer lending talk. We're going to chat about Assets Capital, his involvement with that, and pretty excited about that. So we'll see if we have any comments. Let's see. Stowe Market is in Suffolk in East Anglia. Thank you, David. Now I know. Stowe Market. Colin Perry says, good to see the changes to Kuflink Pay maturity monthly selection is now on the invest page. Yes, that is a nice addition. I like that. Hi, Patty in, I don't know where you are. I forget. Belfast, is it? Greetings, John Day in Nottingham. Robert Pates is here from Greece. Paul New from Stockport. David Allard is here. Darren in steamy Cambridge. Brian Woburn. Debbie says, administrators are great at stripping companies of money. They are. They're really good at that. Carful. Nice to see you, Carful. Thanks for joining. Alan Stratford, another loan available on Quadus, who have been the top peer-to-peer performer for me this year. £100 available bonus. My XIRR, that's rate of return, 17.5%. That's very high. I'll have to check on Quadus. Interesting. Mark V says, whale shaking out over leverage traders for sure. Yeah, I mean, leverage, for anybody that doesn't know, we talked about leverage when we had a guest on the stream who is a company that lends money to traders to be able to leverage their money. So if you say, I want to borrow $50 or £50 to trade Bitcoin, I'll put up £100 and the platform will give you an extra 50 to trade with. That's the leverage part. So if the price starts to fall too much, if you're long, the price falls, you automatically get liquidated out by the platform itself, and that's what's happened to some of these traders out there who absolutely just got destroyed when the price dropped. Mark says, I don't think the El Salvador experiment will work, just my opinion. I think digital currency is the future. Yeah, I'm unconvinced. I think that without education, I think Bitcoin is hard to understand if you are not educated on it. And the El Salvadorians, I'm sure, have not received much, if any, education on what exactly Bitcoin is. They probably have no idea. They're freaked out by the volatility, and that's one of the things that most people get freaked out about. But, you have to understand volatility in investing is your very, very best friend. It absolutely is. If you don't have some kind of volatility on an investment, you will not get paid an interest return, or take savings accounts, right? Zero volatility. You've got risk of the interest rate on your savings account just continuing to drop, but you've got no volatility, so you don't get paid any rewards. And volatility is an extremely important part of Bitcoin, number one, because it shakes out those people day trading who absolutely are over leveraged and should not be doing that. But it also gives that incredible amounts of upwards possibilities that you can get during price raises. So volatility is actually one of your best friends when it comes to cryptocurrency, as long as you're not trying to trade it, and as long as you get into coins that you think have a future. Not all of them do. Akichet says, we want Louis. Absolutely. I will be texting Louis tomorrow because he has promised me to come on the live stream. Louis from LoanPad. Let's try to get him on the stream soon as possible. Yeah, and so I've always said this too about Bitcoin. Just buy and hold, put it on a external wallet, shove it in a safe, keep your keys safe, your crypto keys, and just forget about it. And in 10 years, you can come back and hopefully thank me and say, I'm so glad I invested in Bitcoin. I didn't understand it. I was afraid of many things, but I'm so glad I did. And now Bitcoin is $1 million. And by the way, I saw a news report. I want to see if I can pull this up about it was from Fidelity, and I was really surprised about this. But they had this is a prediction that they could see Bitcoin going to 1 billion US dollars. 1 billion US dollars. I mean, insane, right? Not do I think it's going to go to a billion? I don't think so. I think that's really reaching, but you can see over here, this is Fidelity's report that they did. This is one of the Jurian Timmer, who's the director of global macro at Fidelity, predicts that Bitcoin could reach $1 billion by the year 2037. I hope it does. I mean, come on, right? Who wouldn't want to have a third of a Bitcoin, half a Bitcoin, and for it to reach $1 billion? And this is based on demand and supply models. Now you can go ahead and Google. His name is Jurian Timmer. You can just type in Fidelity $1 billion Bitcoin, and you can see the story. Could it happen? It could. You know, anything's possible. I think I tend to, with Bitcoin, go with the 80-20% rule. I think 80% of what I believe will happen, 20% won't. So you always have to look at both sides of the coin. You have to do your research. You have to know if there is a 20% chance that Bitcoin could completely crash and go to nothing, be aware of that 20% chance. But I don't think Bitcoin will crash and go to nothing. There is always a chance of that downside. So do your own research. But $1 billion, I mean, even if it were to hit $1 million, I think a lot of people would be extremely happy about that. So we'll see what happens. Let's have a look, see what else you got. I'm interested to hear your thoughts on whether UK will overregulate crypto or go down the peer-to-peer and route and warn investors they could lose all their money. You know, here's my opinion. I don't think that the regulators know what to do with crypto, and I think it's going to take them a really long time to figure it out. And the real answer is I don't know. I don't know. I think governments tend to overregulate things, but I think in this case, it's going to take them a long time. I think they will do the warnings. I think a lot of the banks are going to get involved to try to steer people away from cryptocurrency because of the decentralization. But the regulation side, I have no idea. I just know whatever they decide, it's going to take a long time because they don't understand it. They don't understand cryptocurrency. Supposed to be taxing people's stock market shares from next year in the UK, according to Boris. Don't know how they'll pull that off. Yeah, I mean, what an accounting nightmare that one is going to be. I don't know how they'll pull that off either. I don't see that one happening. Again, I think it's going to take them a long time to figure out how the hell they're going to do that. Yeah, Mark B says we can't access certain crypto products or platforms like Voyager and Celsius here. Yeah, it's unfortunate. You know, and the funny thing is, too, in the US, if you use Binance, you can't access a lot of the crypto coins that Binance.com, which you can use in the UK, has. So, again, it's different in different countries. Patty took on some loan pad, which I think is sound. I took on chance on some estate guru. Okay, loan pad's been nothing but good so far to me. Peter Vince, you mentioned Solana a few weeks ago. I see it rocketed through the roof. Any ideas what that is all about? Yeah, I mean it's a solid coin. There was a lot of people who were investing in Solana because it's a layer 2 Ethereum solution designed to lower fees. One of the biggest problems with Ethereum right now, if you actually try to send Ethereum to anybody or make a transaction, you'll see sometimes the fees can be really high. Solana is trying to combat that. I think it's a solid company, so Solid companies get solid investors, and then money comes in, price goes up. We've seen that happen with Solana. As a novice investor in crypto, how do you decide which coins are good and which ones to avoid? I would personally stick to coins in the top 10. If you go to CoinMarketCap, I will show that to you. It's the best place. It's coinmarketcap.com. You can see what the top 10 coins are by market cap. Here, Bitcoin being the biggest, followed by Ethereum. Bitcoin at $877 billion market cap. There is a couple on here that I would not touch. Just my opinion again, not financial advice. I'm not convinced on Cardano. I've read developers do not like their product. They find it hard to use and it's not working very well. Binance coin, this is the coin that's used for all transactions on the biggest crypto platform in the world, which is Binance. So I do like that tether. I would not touch with a 10-foot pole. That's a stable coin. Solana I like a lot. You can see it's dipped down quite a bit, but it's up 45% for 7 days, and it was over $214 today. So there's a pullback on Solana. I'd be looking at a price target of in the 140s to get in on that if I was looking to buy some. So maybe wait for a pullback. XRP Ripple, not really a fan of that too. Problem is there's a ton of coins that can be released on the market at any time. So risky. Dogecoin, no, not really a fan. So look at some in the top 10. You could even go as far as the top 20. I think Chainlink is a solid coin at a $12 billion market cap. Litecoin I wouldn't touch. Bitcoin Cash, no. Binance USD, no. Algorand, no. I think Uniswap is a decent product. It's a decentralized exchange where you can swap your different cryptocurrencies to buy ones that aren't available on some of the other exchanges, and Uniswap makes a fee off that. I quite like that. And then the other one I quite like that I picked up during the dip here was Polygon, which is Matic. I'm big on the payment ones at the moment because Ethereum is obviously the main player in the payment NFT smart contract game, but it's very expensive, and those problems of cost are not going to be fixed until Ethereum 2.0 comes out, and we're talking about probably the end of next year. So you do have some opportunities here in coins like Solana, but if you're very, very, very inexperienced, I would just say, you'd be okay just sticking with Bitcoin for the most part and adding some Ethereum in there, and then maybe putting 10 or 15% of your funds into a couple of these top 10 coins like Solana, down maybe Uniswap and Chainlink, and maybe some Polygon. So that would be my advice for who's experienced. Just start small and really understand, go to these coins websites and learn what they do, because they are startup businesses, and they do have use cases, right? Like for instance, Cardano doesn't have use case right now. It doesn't, there is no company is actually using Cardano at the moment because they haven't released Cardano's fully working with their smart contracts. It's going to happen supposedly soon, but it has an $80 billion market cap on something that is not actually really being used right now. But if you look at a company, for instance, like Chainlink, Chainlink has a big usage at the moment, and you can go to their website and see exactly what they do. And this is important to know if you're going to invest in any of these companies. This is a data provider. So Chainlink actually provides data to a ton of other crypto services. So high use case. high use case. That's what you want to do, invest in companies that are actually being used and are making revenue. So just be careful with the other ones, though. They're very speculative. I mean, you've got companies like Phantom that have gone up 30% today, but again, not a top 20 coin. Let's see where they are. Phantom right here. 4.2 billion market cap, so way down the list as far as the size of the actual coin goes. You just got to be careful with these. They're quite speculative. See, it's gone up 8.8%. Today it was as high as 1.88. Actually close, $1.91 right now, 1.66. So we've seen a pullback. But you got to be careful with these coins. This is the 40th ranked coin, Phantom. Don't chase returns with these coins, and just be very, very careful, because some of them are high risk. They are startup companies. But one thing I did write on my report on Crypto 101 is how, being able to invest in these companies and these altcoins really gives everybody an equal opportunity. So if you think about stocks, right, as average investors, we are not presented with the same opportunity as very, very wealthy people are, or even people on Wall Street. Things like IPOs, you can get in on companies early before the shares are floated on the stock market. Unless you're a accredited high net worth investor, you do not have access to things like that. With these altcoins, you have an opportunity to invest in companies that could essentially blow up, and everybody's equal because they're decentralized, right? They're not governed by Wall Street. So it presents really big life-changing opportunities and a way to accumulate wealth. The key thing is knowing which coins to invest in. That's the most difficult part. There's a lot of good resources on YouTube out there that do technical analysis on a lot of these coins, price predictions and things like that. And they look at the use cases for these coins. They look at the people who are behind the projects. Extremely important. Cardano is actually backed by one of the co-founders of Ethereum, and that's why people like Cardano so much. But again, whether that coin is going to succeed in the long run is pretty iffy. But just be careful, be wary when you're investing in those coins. Mark B says, if you buy a whole Bitcoin at 46,000 today, in 10 years you'll have times 20. I think so anyway. Yeah, it's hard to say. I don't know what that price is going to be. I'm very optimistic. Binance, I was frustrated to see they have discontinued fast payments. Transfers to your debit cards can still be done for a 1% fee. Yeah, this is the problem with Binance right now. The banks in the UK are just cutting them off, and it's become an issue. Just go to another. You could try FTX. They're really cheap. Yeah, as Mark said, it's an interesting space, cryptocurrency. It takes a while to learn, and yeah, I think that's education is the key. There's just so much good information about crypto, and it's still so misunderstood. But you are in such an early stage right now. Again, 145 million users of Bitcoin, and we're talking about from 2009 to now. For it to grow the way it has is incredible, but you're very, very early right now. If you think that 46,000 is a lot for Bitcoin, I disagree. It's going to continue to go up, in my opinion, and it will change the way that people invest in the future digitally. Digital assets are the way of the future. The old school way of investing will probably be a lot smaller than it is right now. And especially young people. I saw a story that somebody posted on the Facebook group about the Royal Mint had done a study saying that young people, 2/3 of young people were getting out of cryptocurrency and they were investing in gold. And again, be careful what you read, because the Royal Mint makes its money from selling gold and precious metals. So a very biased study. But, gold could be a good hedge. I think in some ways some safety there, even though gold can be extremely volatile too. But I think digital currencies are the way of the future. Anyway, right under 1 minute. Gonna get out of here. Thank you again to Kuflink, the sponsor of this channel. Appreciate you for doing that. Narendra at Kuflink, sign up. We'll be back next week again. Hopefully Andrew Holgate will be here with us as a guest, so don't miss it. Put it on your calendar. Please subscribe to the channel. Thank you for being here. Love you all with all of my heart. I'm glad to be back. I will see you next week. Have a great weekend. Stay safe. Stay healthy. Take care.